All right, what's up, guys? Today we're going over our second weekly outlook video. Today is August 12th, 2018. Last week we made our first one, and if you looked at our projections from last week, everything pretty much played out pretty nicely. Some of the pairs that we went over last week, they still have setups for this week. So just like last week, one of my favorite pairs was GBP AUD. And if you can look, I had looked for bearish opportunities in this blue supply zone, right? So price spiked through the zone, closed, and then from there it dropped 500 pips to the downside. So last week, I like this. I would have liked to see a retracement back up into the zone, but price just straight dropped. So now you can see late last week we have two candles rounding off into support. So now we have a good support area. So now we can redraw our Fibonacci retracement. So now instead of it drawing it from this high to this low, now we can draw it from this new high to this new low and potentially get retracement points. So the 38.2 has already been hit. It looks like it's aligning for the 61 to the 78.6 to get hit. So for GA, I'm going to be looking for price to make a new higher low around, or no, my fault, new lower high around this area so I can take it back down to the lows. So if you, let me just draw an arrow for you guys. Let's see. So you would want to see something either right here coming towards the 176 area or price pull a little bit higher towards the 177 area. Let's see. So anywhere around here would be our selling opportunity, and then overall we'll look to take it back lower. Price could potentially break these lows and come down towards 1.72, or it could possibly find support around 1.73. But overall, the overall market is bearish, so we're going to look for price to keep making new lows until we can see otherwise. So real quick. So at these retracement points, these are the areas where we like to enter. So if price were to pull up to the 61.8 and retest this previous support area to the left, and price holds, then the 61.8 may be our overall high or our new lower high. And then we'll look for a sell right there. Our stops will go either above this previous high around 78.3, probably like 10 pips, 15 pips above that, or we'll wait for price to pull up to the 78.6, enter around here, and then put our stops 15 to 20 pips above this high right here. But overall, I'm looking for bearish opportunities on GBP AUD. I just would like to see a slight pullback before taking it back down to the downside. So don't really have to go over too much on GBP AUD. Self-explanatory. Wait for the pullback around the 61.8, 78.6. Look for sales and then take it to the downside for the most part. And your stop should be above the previous highs right here. So, yep, let's go to the next one. GBP NZD, another pair that we traded last week. So, yeah, I had this trend line from down here. I connected it from this point to this next higher low point. So, point A to point B, and extended out to the future. So, price finally broke through right here. So, let me just highlight where it broke out at. So, price broke out right here, came down, found support, and then pulled up. On the pull up, it retested that broken trend line and found resistance, and then made a double top formation. So from that double top formation, I drew my fib from the second high right here down to the end point. Price pulled up, hit the 38.2, closed below, and then shot down and hit our take profit last week. Once price hit our take profit at the negative 27, we got a strong bullish engulfing that retested the trend line again. So now we can redraw our fib since our TP got hit and we got a retracement. So now you're going to redraw the fib from, keep it from this high and then draw it down to the overall low. So now you can see we have a 61.8 retracement and price is also retesting the trend line, the broken trend line, additional time. So overall, I'm looking to sell this pair anywhere from around where price is at. I would like to sell it above the 94 area, or I would like to wait for price to hit the 78 or the 88.6 retracement. So let me just highlight this box. I'm coloring green. So yeah, if price could come in this area, this would be my ideal sell zone, and then my stops would be anywhere from 15 to 20 pips above these highs. And overall, this pair can drop back down towards 1.90 or possibly 1.89. So if price is at 194 already, and we're saying that it could come back to the lows, this is going to be anywhere from a 300 to 400 pip setup if we get the bearish price action that we're looking for. If not, if you wait patiently for price to come back above or 194.2 area, or if it hits the 78.6 and you put your stop loss above the high, you're only risking, probably like 100 pips to potentially gain 400, 500 pips. So it's pretty good risk to reward. Let me just put it on so you guys can actually see it visually short. So if it came up towards here, we do it like this. Your stops would be 10 to 15 pips above this high, like that. And then your TP would be down here. So with this setup, it's a 3-to-1 setup. Pretty good. At the end of the day, something like this, I mean, you could potentially lose 100 pips if price were to shoot to the upside, because you always got to factor in if price goes against you. So it's not like everything's going to be 100%. So always keep in mind to have that small belief that price could potentially shoot up, and break your order. But if it does do that, you don't want it to where you're losing out on your equity, too much of your equity. So if you had a $1,000 account and price shot up to the upside, you don't want your account to be at $100 after that. You want to trade with proper risk management on something like this. So when it does invalidate the setup, then overall you still have another opportunity to take a trade again. All right, so overall, like I said, GBP NZD, we got the breakout retest. If price pulls up to the 78.88, we're looking to sell it. Overall, take it back down to 400, 500 pips, back towards 190 to 189. And that's my thoughts on GBP NZD. I'm gonna go over one more pair before handing it over to Brandon. Euro Jappy. So this is another pair that free fall last week. So you can see I drew my fib last week just to give a little recap from this high to this low. Price pulled up, gave us tweezer tops at the 61.8, and from the 61.8 from 130, shot all the way down to 126. So 400 pips easily on this pair. Overall, price is still bearish, but because it dropped so hard last week, I would like to see somewhat of a retracement before possibly taking back lower. So if I could see anything like, for example, so this candle still has yet to close. It all depends on this candle. Don't get me wrong. Sunday open can happen, and this candle could push it, back down towards 125, 124 if it needs to. But overall, if this candle closes and it starts to round out, I would like to see price pull back up towards 128, maybe 128 to 129 area. So something like this. So the 128 resistance now would be right here, which would be retesting all this structure right here. So that's a good area to take it first. And if price were to go a little bit higher than that, then the 129 area where the yellow box is at. So my first area to look would be 128. Around the 128, we're looking for either a break or bounce scenario. So we're either going to look for a bounce back down to the downside, or price is going to break 128 and possibly go towards 129, 130 area. And then if it were to do that, then overall, we're going to look for still selling opportunities, because the overall market of this is bearish. So just like this, you can draw your fib. I drew my first fib from this high to this low, 61.8 retracement, hit my TP. So now I'm going to take it from this new high and then draw it to this new low. So keep in mind, this Fibonacci retracement isn't 100% accurate just yet, because this candle has yet to round out. So if this week opens up and the next candle pushes it below this, then this fib is wrong, and I need to wait for the candles to kind of start rounding out, and then I can place it at that new low. But just for this video, let's just see if this could potentially be the low. And if it is, you can see that 128 area aligns with the 38.2 perfectly. And then the 61.8 area aligns with the 129 area. So ideally, because price dropped down 400 pips and straight dropped, I would like for price to pull back up towards 128 or 129 before looking for the next selling opportunity. And then overall, you could possibly take it back down towards 125 to 124 TPs. And then once it hits, if price hits 124, I'll probably be done with it for a while until I get another retracement. Because overall, if price comes up to 128, goes back down to 124, that's another 400 pips on this pair. So just something to look out for. Remind you, Euro JPY moves pretty violently, so you don't want to just jump in too early, because even if you jumped in at 128 and price broke through this and pulled up to 129, 130, that you're going to be like anywhere from 100 to 200 pips in drawdown. So just make sure that you wait patiently for this 128 area to either break or bounce. So for me, I like to wait for either a few 4-hour candles to close or wait for that daily confirmation candle to close. And your daily candles close every day at 2 p.m. Pacific time, 5 p.m. Eastern Standard Time. So just keep in mind for that. But yeah, those are my thoughts on these pairs right now. I'm going to be looking to trade mainly GA and EA this week. I think Brandon's going to go over EA, so let me hand it over to him real quick. And let's see. Oh yeah, so here goes Brandon right here.
What's going on, guys? So here we have weekly outlook. I'm going to do Euro AUD, as well as Euro versus New Zealand dollar and Euro USD. So this is a pair we've been watching for really the past over a month, really. Actually, I remember when I first identified this trade, I think it was like 2 months ago. This high here, where was that, April? Okay, so yeah, that was a while ago when I first marked up this chart. So what we have here is we have a strong level of supply. We're in a strong supply zone right now. I always tell people, look left to go right. You see what price did on the left in this zone? You had price exhaustion. It wicked. All these wicks up here pulled away, took off to the downside. So that's pretty much what we're getting over here now, right? And last time price was in this at this level was over 2 years ago, February 2016. So when you have a lot of empty space as well, empty price to the left of price, that's also a good sign. All right, so you're in a strong level. So what I would do, I would take this rectangle, and I would pretty much draw up my supply zone. All right, I'll mark this up. All right, always keep in mind that the market is telling you a story, right? What happens to the left tends to happen to the right. All right, so I'll mark it up here. This level here is more relevant since this was about over 2 years ago. You had price wicked in this zone, pulled away. All right, so now that's exactly what price did over here. So once I saw price start wicking in this area, I knew it was a good time to start looking for sales. Okay, and as you also see, it's a huge head and shoulders right here as well. So we have this head, left shoulder, right shoulder, and now we have a huge flag being formed. Okay, so what I would do, I'm gonna also draw a demand zone in this here, so you can see how you literally can take this zone to zone. So I'm expecting eventually price to get all the way back here down here. This is the weekly chart, so the higher the time frame, the stronger the confirmation, but also the longer the trade it takes for the trade to actually play out, right? All right, boom. So that supply zone. Here we have a level of demand. You see when price came and rejected up here in this supply level, it took off to the downside, creating lower highs and lower lows to a downtrend. Then it hit this level again, the previous demand level that it was before when it took off up to the supply zone. All right, so this took off from this level again back up to the supply zone. So now what you think is going to happen? We're expecting a drop all the way back down towards that demand zone. All right, so what I would do is I'll go down lower time frame, see the daily. Right, can mark up this as well. It's a little demand area. Boom. So we got the breakout on this pair that we've been waiting for. This consolidation, price been consolidating in this zone, ranging sideways, right? It's normally not the best time to enter when price is just moving sideways and ranging. But when you get a breakout like we got here, then you always want to wait for the pullback, the correction. Because you're always going to get that retest before it fully takes off. You know, you have sometimes when price just have a straight drop or a straight rise, but it doesn't always happen so impulsive without having some form of correction, right? Like you see here, price dropped from this high to this low, and then it pulled all the way up. All right, about 50% of that drop. So what I would do is I would draw my fib as well. Draw my fib from this high, this swing high, or this double top, down to this swing low here. And what you can see is price is basically, this consolidation zone is basically around a 61.8. So the 61.8 is a golden ratio. All right, that's like the biggest, the main zone, the main retracement zone that we look for. When we get a rejection of the 61.8, that's a good sign. So as you can see, it rejected there, rejected, it kept rejecting in the zone until we finally got this strong bearish breakout candle here. All right, draw a trend line. All right, so what we're waiting, so what we're looking for is pretty much a pullback. Okay, price to end the week, price did pull back how I kind of wanted it to. You see this wick here, it pulled back to about 5.7. Basically retested this consolidation box. It retested the breakout. So that's always a good sign. So we're still sitting on our hands. Okay, we're not in this trade right now, but we're going to sit on our hands and actually see if we can get another retest up. See if we get another retest up to 5.7, maybe 5.72 area, before we look for the continuation down. Okay, so we're looking for it to go up, create that flag, pull back, drop. All right, because everything is showing us that we're in a downtrend. This is the second level of drop that we're on right now after this double top, which is a strong bearish reversal going into this supply. All right, so I'm really expecting price, for sure hit this level here, but I'm expecting price long term to really break past the bottom of this flag here, price here. So really long term, I'm expecting this to go really all the way back down to this demand zone. So you have sell opportunities on this pair for a while, because this is going to take a while to play out. But as you can see, look left to go right. So I'm expecting us to definitely long term hit that big drop there. Because this was an 800 pip drop, pull back about maybe 300 pips or so. Now we're going to continuation down to the downside. All right. So we're going to be looking for target levels around 5.1, 1.5, and lower. All right. So that's Euro AUD, pretty simple. Now let me look at Euro NZD. All right, so Euro NZD, this is the weekly here. And what we have right now is we have another supply zone. Okay, as you can see, price up here. Last time I was here was late 2017, November 2017. So look what price is doing in this level. It's wicking. Again, it's showing exhaustion. So this is a good sign on the weekly candle. Price is wicking out this area. So that's what we look for. When you come to strong zones, you want to see price reject, because the only way that we will look to take that up higher, price will have to break past this zone and close above it. But right now it's giving us the price exhaustion that we want to see, right? So go down to the daily chart, okay? And this plays into when we talk about channels and flags. As you see, price been moving up on an uptrend from this low. It's been moving up on an uptrend. All right. Then it pulled back here. It pulled back here and created this little channel. All right. Which is also, it's a channel and this is a bullish flag. All right. So it pulled back, consolidated here, and then it broke out. So once it broke out, you could have took that buy back up to look, the same supply zone we have here to the left. All right. And it's doing exactly what it did before. It's rejecting it. It's rejecting it. So once you get that bearish rejection, that's a good sign that your sell opportunity is coming up. So what we will look for, because price already dropped about, let's see, I was in this pair but closed it out to end the week. So we'll be looking for retest. Yeah, so this pair already dropped a little over 200 pips, about 220 pips. All right, so we're definitely looking for a retest going into this week. So I want to see something like this. I want to see price pull up, rally up, maybe to around 7.4. If not, it could make a double top as well. So be on the lookout for that. But I would definitely want to pull back around in this range. Okay. And I will go to the smaller time frames. When I look at my flags, you know, I look at the higher time frame, you know, like the 4 hours, see what price is doing. But I like to work my way to the 1 hour as well to enter on these flags. Like you see here, it's pretty much creating a flag here. So I'm expecting a little bit more of a pullback, but don't be surprised if price barely pulls back and drops from here. All right, because it's never 100% how far or how big a flag is going to be, but you just got to look at market structure, right? Like right here, okay, the previous high here wicked out and dropped, and then you have the double top. So it is possible that price won't go higher than this previous high right here, or won't even reach the neckline. Excuse me, won't even reach the neckline that is double top. So if you see that, you know, don't be startled. If you miss the trade, you know what I mean, just wait for a pullback. But it looks like it's pulling back now. All right. So if I get a strong bearish confirmation or strong bearish engulfing candle here, then I probably would look to enter. All right. Stops will go above this double top, maybe about 10, 15 pips above this high. All right. And then you just take it down. So always be wary of your risk management, because price did already drop about 200 pips. So I would like to see at least a 50% retracement, which we're getting bit of that right now. And long term, I see this pair paying out. Nice. Because as you can see, what happens to the left happens to the right. So I really would like to see something like this. First target, at least to the bottom of this channel. But I would like to see it break that and take us all the way down to the downside. All right, so depending on your goals, I mean, 50 pips, 100 pips, whatever your goal is, I believe you can accomplish it here with this setup as well. All right, so that's Euro NZD. Euro USD, and then we'll wrap it up. All right, so Euro USD is a pair that I've been watching, and I believe when I did the last weekly outlook, I was saying this is a break or bounce area. So as you see, price broke through. This was a strong weekly zone, but it broke through it. Okay. Now you see where price is at now. Look to the left on the weekly here. This is a key level. Where price is at now, this once was resistance before. This was a resistance level here. You see price wick through it, rejected, 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 price reject all in the zone. So I would like to see how price reacts in this level that it's at now, basically around 1400. All right, I would like to see how price reacts, because if price breaks through, if we get a break through this level, if we get a strong break through this level here, right, and price closes through this level, then you'll just wait for your retest. Wait for the retest of that level, and then take it shorter. It's really that simple. You just really wait to see what the market gives you and react. All right. Don't be impulsive, but, you know, sit on your hands. It's good to sit on your hands, see how market is reacting to price, and then you just react to what it's doing. But it's good to know both biases. So this is the bearish bias. We're looking for a break of this level, basically about 1400. If price breaks through, closes through, wait for the pullback, retest, take it down lower. I would say down to at least, this is real long term. So I don't know if EU want to really drop, really tank like that just yet, but the dollar index have been strong, so it is a possibility. Unless we get a strong bearish correction on the dollar, then you could expect EU to break up. So go to the daily. So here, I'm still expecting a pullback. So if price don't break this zone, and instead you get a strong bullish rejection here, Say you get a strong bullish engulfing candle. Then you can look to take it back up to about 17.4, 17.5 area. All right. So if price does the opposite, gives us a bullish breakout, impulsive, wait for the breakout, wait for that pullback correction, take it back to the upside. All right. So that's EU. Real simple, because these moves already happened. So we just want to show you guys how we catch continuation and how we follow the trend and trade in line and react to price action. All right. So I hope that helps. Let's have a great week catching pips and see you guys on the next weekly outlook.